let's also talk about the multinational companies, right? Nimesh is focusing on them today. Nimesh, why is that?
Well, Surya, the newsmaker this week was ITC, right? We all know that BAT had sold 3.5%, but it was not only BAT which sold stake. The three big MNCs have raised close to $3 billion from Indian subsidiaries in 23. So let me just go to the wall and explain what the whole event has been for this year. If you look at this year, the biggest deal, of course, was ITC, where BAT sold 3.5% stake and they raised 17,000 crores in a single day via block window. So that was a kind of demand for the Indian paper. The second big deal was Whirlpool. In Whirlpool, the Whirlpool Corp sold 24% stake this year and there is close to 4,000 crores. And Timken was the other MNC where the parent sold 8.4% stake in Timken India and there is close to 2,600 crores. So these were the three large deals which happened in FY23, raising close to $3 billion. Now, look at the valuation picture, and why I'm saying this. That's been the key reason why a lot of MNCs are encashing from the Indian subsidiaries. ITC, India stock is trading at close to 25 times, all at trailing multiples. So that's at 25 times, whereas BAT is trading in single multiple at 6.5 times. And that's been the case with all the MNCs as well. The second chart, which is the next stock was Whirlpool. Look at Whirlpool's P multiple as well. Whirlpool India is trading at close to 74 times, again on 12-month trailing basis, whereas the parent is quoting again in single digit at just 9 times on trailing basis. Same is the case with Timken as well. Timken India, where the parent sold 8.5% stake, that's trading at 53 times on 12-month trailing, whereas the parent is quoting at just 12 times. So that's the kind of valuation gap which is there between India and the MNC names. I've just looked at the other 5-7 large MNCs in terms of market cap. United Breweries, Hindustan Lever, Nestle, Maruti and Siemens. Across the board, the common theme is there has been a big gap in terms of valuation between Indian company versus the parent. Look at United Breweries. The Indian subsidiary is quoting at 124 times on trailing basis, whereas Heineken is trading at just 22 times. That's been the case with the others as well. Look at the next stock, which is Nestle India. Nestle India is trading at close to 80 times on 1 year trailing basis, whereas Nestle parent is trading at just 22 times. So big gap there as well in terms of valuations. Same is the case with Hindustan Lever, quoting at 60 times in India, but the parent is quoting at just 17 times on a 12-month trailing PE. Look at the case with Siemens as well. Siemens India is trading at close to 68 times, whereas Siemens AG is just quoting at 16 times. So again, there are a big gap in terms of multiple there as well. And the last one is Maruti Suzuki. Even in case of Maruti Suzuki, the Indian arm is quoting at 32 times, and whereas Maruti Suzuki, the Maruti Corp, Suzuki Corp is trading at close to 13.5 times. So that's the case where in India we've seen a big gap in terms of PE multiples, and a lot of MNCs get a premium. I guess that's the reason why even like an Hyundai is looking for an India IPO. So clearly, from an MNC perspective, it's a good arbitrage to sell Indian company and look at, doing a buyback in the parent as well, where the valuations are quite cheap.
Nimesh.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.